Hi, I'm Kate Miller and welcome to Property Focus. Making headlines this week, house prices in New South Wales are set to swell as first home buyers rush to beat stamp duty concession cuts and residential units and apartments price growth outpaces that of houses. But first to our lead story. Residential auction activity has failed to ignite despite the arrival of the traditional spring selling season. Clearance results in Sydney and Melbourne were just 54.8% and 50.8% over the weekend of the 3rd of September, the first official weekend of spring. While the results point to good buying opportunities for investors, those looking to sell may need to readjust their expectations, according to Resi Home Loans chief Lisa Montgomery.
What's interesting is that we've got a lot of property that's come onto the market pre-spring season. I think what we're going to see is a lot of vendors are going to be perhaps a little bit disappointed with the price that they're going to be getting, because we're not going to be seeing perhaps their expectations be realised in the short time, because borrowers are going to be few and purchasers are going to be few. But the investor market is still there, and there's some savvy investors which are taking advantage of the situation as it is now, in terms of looking for the property that might be on the market at a good price.
First home buyers and investors in New South Wales have been dealt a blow following the state government's decision to withdraw stamp duty concessions for first home buyers as of January 1, 2012. Under the changes, first home buyers in New South Wales will no longer be able to claim stamp duty exemptions on established homes. Instead, only first home buyers purchasing new homes will be eligible for the concession. While the news is an obvious setback for aspiring buyers, there are also concerns among investors that the changes may push up prices in the lower end of the market. Real Estate Institute of New South Wales President Wayne Stewart said that as first home buyers scramble to meet the January 1 deadline, prices would inevitably rise as demand exceeds supply. Prices of Australian units are growing faster than those of houses, a new report has found. According to RP data, capital city unit values have climbed by an average of 6% per annum over the past 5 years, compared to 4.8% for houses. The results reflect a substantial shift from the 5 years prior, where average house price growth exceeded that of units by more than 3%. The results reflect changing lifestyle trends as well as affordability issues, RP Data's Cameron Kusher told Property Focus.
I think the reason why we're seeing units appreciate in value more so than houses over recent times comes back to the fact that they're more affordable. I think, especially in cities like Melbourne and Sydney, a lot of people rent when they're younger in the inner city area, and they don't necessarily want to give away that lifestyle. It's good to be close to all the shops, 10-15 minute trip home from work.
And the October issue of Smart Property Investment magazine is on its way to newsstands across Australia. In today's market, which represents the best investment, real estate or stocks? We'll reveal which investment packs the biggest punch. Plus, find out how multi-millionaire Joseph Chu used property to go from modest migrant to $25 million magnate. All of this and a whole lot more in the October issue of Smart Property Investment magazine. Pick up your copy today. And that's what's making headlines this week. I'm Kate Miller. See you soon.